Nearly 50% of homes on the market here in Yorba Linda have had to make a price cut in the month of September. Does that mean the market's imploding? Stay tuned, we're going to dig into the data, you'll find out. So as of right now, mid-September 2022, there's about 123 homes listed for sale here in the city of Yorba Linda. And out of that, almost 60 of them have made a price cut. So what does that mean? Well, if you ask me, I'm going to tell you it does not mean that the real estate market is imploding. What it simply means is that sellers have become too aggressive with their pricing strategy in relation to where today's mortgage rates sit. So here we are mid-September and rates are back above 6%. Contrast that 6% 30-year mortgage rate to this time last year where we were in the low threes, and the buyer's payment has nearly doubled since the same time last year. So common sense tells me that the buyers cannot simply afford to pay the same amount that they may have paid for that home last year as of today. So knowing that half of the sellers on the market are making price cuts, what does that mean to our values? Well, here's the reality. Prices are still up month over month. Prices are still up year over year. So although sellers are making price cuts, we still have not seen any evidence here in the city of Yorba Linda that prices are going down. Now, if you read the national news, they will lead you to believe that prices are going down. And it is true. There are certainly some areas of our country that are seeing downward pressure on their pricing, and month over month, they're selling for less than they were. But as we know, real estate is very local. And here in the city of Yorba Linda, we've got a very strong economy and our prices simply have not gone down yet. So where do we see things going from here? That's probably the big question on your mind. And let me give you my prediction. Currently, we are still below a 3-month supply of homes, which means we are still firmly in a seller's market. For frame of reference, when we get to a 6-month supply of homes, we consider that a balanced market. And rewinding to the Great Recession, we had a 15-month supply of homes, which meant that if you put your home up for sale, it might take more than a year to go into escrow. Where we stand today here in Yorba Linda, it's 2.5 months. That's still a brisk pace, although not as quick as last year. So just as numbers would tell you, although there's more homes for sale and there are fewer buyers, in order for us to see prices actually come down, we're going to need a lot more homes for sale, and we're going to need the continued anemic number of buyers searching for new homes. I just simply do not see prices crashing. Doesn't mean we may not see some fluctuation in prices as we move towards the holiday season, which is naturally a slower time of the year. So check out this chart here. Now this is for the entirety of Orange County as a whole, but it illustrates what is happening. You're going to see that the number of homes coming on the market has already peaked for this year. So we would expect that each week we'll see fewer and fewer number of homes for sale until we get into the new year. But what's interesting is it also shows that the buyer demand had been trending downward, and in the last month it has flattened out and is actually moving back up. All that tells me that prices are going to stay stable here in Yorba Linda. All right, so in summary, what is going on here in Yorba Linda? Prices are still up year over year. Inventory is still low, although the demand is quite low as well, but we're not yet in a position to see prices fall. And if you are a seller, you got to come out of the gate with a realistic price. Last year, we could have put up any price and still got an offer, or 5 or 10. We will not see that anymore. So you've got to price your home in line with its actual value for what it delivers to the marketplace. I'm Steve Mortensen with Coldwell Banker here in the city of Yorba Linda. Thanks for tuning in. We will catch you on the next one.